Hello and welcome to Mirae Asset Sharekhan December 2025 investment strategy. I'm Sachin.
And I'm Apeksha. Today we'll walk you through this month's equity and debt market strategies, the major macro signals, key charts, and finally the model portfolio recommendations for different investor types.
Let's take a quick look at the market internals and momentum indicators. November saw mixed sectoral results. Nifty PSU Bank lead with more than 5% returns, followed by strong performance in IT, Pharma. Meanwhile, sectors like metals, media and reality ended in the red. Midcaps and large midcaps outperformed, while small cap 250 fell more than 3%, reflecting consolidation and selective profit taking. FI continued to be net sellers in November, though outflow slow compared to the previous month. DIIs, on the other hand, sustained strong buying support, helping maintain domestic market stability. The US Federal Reserve's recent interest rate easing is a major driver of global liquidity. However, volatility persists, fueled by geopolitical tensions and ongoing trade uncertainties. Japan's public debt levels are already among the highest globally. Rising Japanese long-term yields make their bond attractive, which could divert global liquidity away from other markets, including India. India story. Credit growth surged more than 11% in November 2025, outpacing deposit growth of 10%. This signals strong financial demand and economic recovery momentum. On December 5, RBI cut the repo rate by 25 basis points to 5.25%, reiterating its commitment to growth and financial stability. The RBI has stepped in with liquidity boosting measures. Rupees 1 lakh crores OMO purchases and a $5 billion rupees swap, along with 1% CRR cut earlier. These moves aim to keep liquidity comfortable and ensure smooth transmission of rate cuts. Gold prices remain above $4,000 during the first week of December, and this reflects higher demand for safe haven assets amid global uncertainty and optimism over possible US Fed rate cut. The Indian rupee hitting a record low due to a strong US dollar, higher global rates, and the widening trade deficit. Recovery could follow if FI inflows improves and global volatility subsides. Challenges. Global slowdown amid tariff wars could affect domestic economy. Any delays in domestic activity pickup may impact corporate earnings and dampen overall market performance. Strategy. Large cap equities and select mid and small cap ideas remain preferred choice for long-term investment. RBI's monetary policy update. The RBI's monetary policy committee cut the repo rate by 25 basis points to 5.25%, maintaining a neutral stance. Growth projections were revised upward, supported by strong H1 numbers. CPI inflation is 2.25% in October 2025, aided by GST rate cuts and food price deflation. In response, the RBI lowered its FY26 inflation forecast to 2%, though it expects inflation to ease in FY27. Looking ahead, there is still room for another 25 basis point cut based on the current projections. However, the Reserve Bank of India may choose to pause for now, keeping flexibility for future rate cuts if global headwinds start weighing heavily on growth. Have allocation to accrual strategies and the shorted on the yield curve, where yields are currently attractive. Dynamic bond funds make sense to navigate changing interest rate scenario. Additionally, we see prudence in holding some gold and silver as a hedge against global uncertainties. Factors like central bank diversification, strong industrial demand, and ongoing geopolitical risk are expected to keep momentum in these precious metals.
Hi, now let's move on into actionable insights, our model portfolio recommendations for December 2025. First, we have the aggressive portfolio. For high-risk investors with long-term wealth goals, the allocation is 40% in large cap, 15% in mid cap, 10% in small cap, 25% in flexi cap, and 10% in thematic. The representative funds include Nippon Large Cap, ICICI Large Cap, Motilal Oswal Mid Cap, and many more, as you can see on the screen. The second portfolio is the moderate portfolio for balanced investors seeking better than FD returns with controlled risk. The allocation over here is 40% in large cap, 10% in large and mid cap, 10% in balanced advantage, 30% in corporate bond and short duration, and 10% in gold and silver. The key funds included are Kotak Corporate Bond, Mirae Short Duration, and many more, as you can see on the screen. The third portfolio is the conservative portfolio for low-risk investors seeking stability. The allocation in this portfolio is 70% in corporate bond and short duration, 20% in balanced advantage, and 10% in gold and silver. The funds included in this are HDFC Balanced Advantage, Mirae Short Duration, ICICI Corporate Bond Fund, and more. The fourth portfolio is a regular income basket for lump sum investors needing steady cash flows. The allocation is 70% in Balanced Advantage, 30% in multi-asset, with the option of 6 to 7% SWP or dividend payouts for regular income. The last portfolio is the Build India basket. This is for high-risk investors wanting to capture India's structural growth story. The allocation is 80% in thematic or sectoral, 20% in flexi or multi-cap. The basket includes Tata India Consumer, Mirae Asset Grade Consumer, ICICI Manufacturing Fund, and others. This wraps up our December 2025 investment strategy. Whether you are a conservative or aggressive investor, diversified asset allocation remains key, especially in a market driven by strong domestic fundamentals and evolving global risks. Don't forget to like, share, and subscribe for more insights. Thank you for watching, and we'll see you in our next monthly outlook.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully before investing.